This is a debrief of Task 8 from the second sample assessment for personal tax. Task 8 is about capital gains tax, specifically the disposal of shares. So in this question we've got some information at the top, but notice we have a free-form table for our workings. So this question is human marked, and you need to make sure that you present your workings in a way that it is understandable for the marker to follow what you're doing and therefore give you the marks. Just a list of numbers with no text may be difficult to follow, and therefore you may not get all the marks that perhaps you deserve. So let's have a look at the information here. So Mr. M holds shares in MJJ Limited and has made a number of transactions over the years. Details of the transactions are, so we've got all this information, we've got 5 rows of information, and we can see in the second column there are some purchases, some sales, and there's some other transactions as well. So before we start looking at this, let's have a look at the requirements. So calculate the gain Mr. M made on the sale of shares for the 24-25 year. Again, in the exam there may be other disposals which we should ignore. We're focusing just on that final disposal. And we need to clearly show the balance of shares and their value to carry forward at the end of the period. And we need to make sure we show all workings. So we'd recommend that for your table that you have one column showing the date, one column for your workings, one column showing the number of shares, and as we go down the page this will be a running total of how many shares we have, and similarly one column for the running total of our costs. Notice it's cost, not proceeds. So yeah, we need to consider that separately. Okay. So let's go through then step by step. So the first one then we have on the 5th of May 2013, we purchased 1,000 shares at a cost of $36.20 each. So in our workings, we've got our purchase, it's going to be 1,000 multiplied by the 36.20. And that gives us a total cost of 36,200. And then on the next line, we have the 12th of August 2015. And so we've got a sale here. We sold 300 shares for £42 per share. So we have a disposal, and we're disposing of 300 shares, so we put it minus 300 here. Now, what's going to be the cost of those shares? Remember, it is cost, not proceeds. That £42 per share is irrelevant for this element of the question. So we only have one batch of shares. We paid $36.20 for each of them. So we are going to value the disposal at the same $36.20 as well. So those 300 shares multiplied by $36.20 have a cost of $10,860. So in this case, because there's been only one transaction, it's relatively straightforward to find out what was the original cost of those shares. So now we can do a subtotal. So we have 700 shares remaining, and the running total of our cost is 25,340. Now this subtotal is going to be important because as we have a variety of transactions, that subtotal is going to be changing, and we'll need it to work out what the average cost is overall. So what's the next transaction? So we're now on the 3rd row. So on the 2nd of November 2015, we received a 1-for-20 rights issue at a cost of £35 per share. Well, let's just remind ourselves what a rights issue is. It's a way for a company to raise finance by selling new shares, but they're going to sell them to the existing shareholders, and normally at a price that is below the market price, which is the incentive for the shareholders to buy those extra shares. So the company doesn't want to change the makeup of the shareholder structure, so we issue the shares based on a proportion of the shares they own at the moment. So in this case we've got a 1-for-20 rights issue, so that means for every 20 shares we own at the moment we can buy 1 extra share. Okay. So let's put that into our workings then. So we have a 1 for 20 rights issue, and that means we're going to take our 700 shares we have at the moment and divide by 20, and that means that we're going to buy 35 extra shares. And we're going to pay £35 for each of those. So let's add that to the working. Here we multiply by £35, and that gives us a cost of £1,225. So we can do our subtotals now. That means we have 735 shares in total, and our accumulated cost is 26,565. So let's move on to the next transaction. So on the 25th of April 2024, we sold 400 shares. But notice that on the 7th of May 2024, we purchased some shares as well. Now, according to the tax rules, if we purchase some shares within 30 days of selling some, then we need to treat these two transactions as if they are connected in some way. Okay, so we're going to deal with them separately to the rest of the pool, which is what we have at the bottom of the screen. Now, the reason for this, again, it looks as if in this situation that they may be selling those shares short. So it could be that we're selling some shares, you see, for £50 per share, knowing that perhaps there are some problems with the business, and then when those problems are in the sort of perhaps in the more well known to people, the cost of the shares will go down. So effectively, we're going to buy those shares back. So yeah, in this case, we've got like a sale and repurchase of the shares. And there's perhaps some sort of connection. Again, it may not be. It could be that these are two genuinely separate transactions. But it doesn't matter. HMRC says because the transactions are within 30 days, we're going to treat them as connected. Okay. So what we need to do then is recognize those separately. So we sold 400 shares and then we bought back 200. So 200 of the sales will be linked with the 200 we bought back. And therefore, in the general pool, we're going to recognize that we have 200 of these shares that are still part of the pool. So on the 25th of April 24, we're going to recognize a disposal, but only of the 200 shares that were not repurchased. Okay, so we're going to deal with those 200 shares separately. So what we need then is, what is the cost of those 200 shares? Well, we're going to use the subtotals that we have in the immediately preceding line to help us with that. So the disposal cost will be a proportion of the cost to date. So effectively, we're working out the weighted average cost of those shares. So we're going to take the 200 that we disposed of and divide that by the 735 shares that we have immediately preceding the sale. And then we'll multiply by the cost of those shares immediately preceding the sale. So that means we have a weighted average cost of those 200 shares of £7,229. And then we can do our subtotal. So that means we have 535 shares left, and our running total for our cost is 19,336. Now on the 7th of May, we bought 200 shares more, but remember, that's part of the matched shares. So we've only deducted 200 here rather than 400. So that means we're not going to add on the other 200. So yeah, at the end of the tax year, we have 535 shares with a cost of 19,336. So let's look at our gain now. So first of all, let's think about the proceeds. So we sold 400 shares, didn't we? And we sold them for, okay, let's just remind ourselves, we sold them for £50 each. So that's the total proceeds of our sale. So that gives us total proceeds of 20,000. And then for our costs, well, we need to split that between the two different amounts. So we've got 200 shares that we purchased for £46 per share. That was part of the repurchase. So I'm just going to call it repurchase, although it may not have been. But just help us to identify what we're talking about. So we've got those 200 shares and we paid £46 each for those. So that gives us 9,200. And then we've got the other shares which are part of the pool. And here we've got the 7,229, which we have in our pool calculation at the top of the table. So both of these numbers together give us 16,429. And so overall, we do have a gain on disposal of 3,571. So let's just recap that gain calculation. So we sold 400 shares on the 25th of April, and then within 30 days we seem to have bought 200 back. So that repurchase amount needs to be matched with 200 of those sold shares. And then the remaining 200 shares are just part of the main share pool. So we've got two different transactions for costs. So 200 relates to the repurchase shares, and then 200, the cost is based on the weighted average cost of the shares through all the transactions.